During the National People's Congress, the Chinese government just announced their new economic targets for 2025. For real GDP, the Chinese government will try to achieve a growth about 5%, which is the same as in last year. But the fiscal deficit target has been raised from 3% in the previous years to 4%. And the Chinese government will significantly increase the issuance of government bonds. For example, for the central government special bonds, the issuance will be increased to 1.8 trillion renminbi compared to 1 trillion last year. And for the local government special bonds, the issuance will increase to 4.4 trillion renminbi compared to 3.9 trillion last year. In this year's government work report, I noticed that the government put consumption at the top of the priority list, which is quite unusual. Many analysts have indicated that domestic consumption has been a weak link in the Chinese economy. So what's your take on this change this year?
Well, if you look at the three pillars of China's growth, export, we know that is being dragged by the tariff implementation. For investment, we know that property investment will be hindered by the property sector turmoil, which is still going on in China. It's natural for the government to stimulate the economy through consumer sector.
And what exactly can they do? I mean, they have tried many other measures.
Yeah, if we look at last year, we have the renewal program for home appliances. This year, as mentioned by you, on the increase in issuance of long-term government debt, they are going to facilitate 300 billion in additional to last year's budget in order to enhance or expand the home appliance renewal program, which seemingly is contributing to some pickup of consumer spending. There have been mentioning of enhancing the social welfare into low-income residents. We are also seeing continuous reduction of property mortgage loan, which at the end of the day, if we are seeing signs of recovering in Tier 1 and Tier 2 cities, property sales with better demand in property mortgage, we are thinking that this stabilization of property prices could also stimulate the consumer spending.
Trump's tariffs have created a lot of headline recently, and he just added 20% additional tariff on Chinese goods. Despite this, we noticed that Chinese government just announced about 5% growth target, which is exactly the same as last year. So how do you think that the Chinese government can achieve this growth with all these headwinds on the export front?
If you look at the export, we know that 14% of Chinese export go to US only, and then 86% of Chinese export goes to new market, including emerging market these days. So we don't think export growth will drop to zero. There should be still a solid amount of growth that could be triggered by export. Manufacturing investment, especially investment into green energy, investment into AI, will continue to increase. All this adding to the general budget deficit going from 3% to 4% through issuance of government bonds towards channeling this money into different programs in stimulating consumer spending, social welfare benefit. This will provide a very solid buffer for the growth of China.
I remember at the end of last year, the consensus market expectation is that the dollar will be very strong, and all the non-dollar currencies probably will weaken against the dollar. And the renminbi is no exception, especially with Trump's threat on tariffs. Renminbi actually was expected to weaken further. While you look at today's currency level, of course, renminbi is weaker than where it was back in September, but year to date, the renminbi actually strengthened against the dollar. So, Cary, what's your view on renminbi going forward?
We are seeing 5% growth target in year 2025 for China, 5% growth of GDP of China in year 2024, recovering equity market, stabilizing property market, adding to the 1% of additional fiscal deficit that is going to be put through by the authorities. We don't think there is a strong likelihood of CNY to drop significantly from here. On the policy side, we are also hearing very consistent rhetorics from the government saying that they will maintain stability of renminbi in medium to long term. Adding to the impact of US tariff to China under market consensus will only be 1 to 1.5% of GDP growth of 2025. We do believe all these measures that we mentioned will be able to buffer the economy of China so that they could achieve 5% growth.
Since Chinese property market tumbled a few years ago, the interest in Chinese credit has cooled quite significantly. So what's the current situation for Chinese credit more broadly now?
I think one needs to distinguish between the high-yield Chinese property market, which suffered from the property turmoil in the recent years, and the other parts of the Chinese credit market, which oftentimes are high investment grade rated. At that part of the universe, the momentum is still very strong. And if we look back into the high-yield Chinese property sector, there are also signs of recovery. 2 to 3 weeks ago, we noticed the first issuance of high-yield Chinese property bonds from a BB Chinese high-yield property developers. The response was overwhelming with high capital gain after new issuance. So at this point of time, we are constructive on Chinese credit, especially those that are owned and supported by the state government. Dong, we've talked a lot about the fixed income market in the region. Could you share your thought about the Chinese Hong Kong equity market, especially under the recent development on DeepSeek and also more positive outlook of the China economy after the MPC?
The Chinese equities actually has been one of the best performing market year to date after being lagging the global equities for quite a few years. And as you mentioned, this market rally actually is entirely driven by the technology sector following the successful launch of the large language model DeepSeek. And this just brought investor attention back to the Chinese tech sector. And people realize that artificial intelligence actually is developing quite strongly in China as well. And so if you look at the implication of DeepSeek, actually allows investors to realize the next stage of development in AI is not just limited in infrastructure, but probably will also move to application as well. And a lot of Chinese companies actually are quite strong in this. So you look at the fundamentals, the earnings momentum in a lot of large tech companies is still healthy. And despite the rally, the valuation remains very reasonable. In addition to that, the Chinese government probably will continue to support the development of AI and technology broadly. So with all these conditions, we think that this tech-led Chinese market rally probably can continue in the near term.